Okay, guys. So, in this one, I want to analyze another asset. Okay, so let's look for another asset, real-time asset that is available for today, and let's see if we can find opportunity. So we see Canadian dollar and the Swedish franc. So let's get to do this again. So we're going to be doing a top-down analysis using the institutional order flow methodology, guys. The institutional order flow methodology. I don't intend to make this longer, as I just want to create a short within a 5 minutes thing and then get it done. Okay, so let's proceed to deliver the value needed. Okay, so what I used to do is I go to the higher time frame. Okay, this is a quick one. A higher time frame. Like I said, I always want to look at the last three candles and their progression. So the higher time frame, the daily time frame, I want to see the most recent trend and why is that trend that way. Now currently it's been a bearish move, but then the most recent trend has been a correctional move. That's a retracement. Where is the market retracing to? Around this way, we saw how the market was consolidating around this area. Okay, so you could see some of these. The market wasn't necessarily moving for about 5 days, but it did an expanded move and then rejected off that price level. Now, if the market takes out this high, yeah, the market is obviously going to be coming for this. Okay, now the market is obviously going to be coming down for a fair value gap here. This is a fair value gap here. This is going to be serving as a magnet zone. Okay, so let's mark out a fair value gap. Okay, so that's the fair value gap on the higher time frame. Now, so what's the market going to do? The market needs to go into this. So we're going to see this trade into the structure the next few days. So what am I going to be looking out for? I'm going to be looking out for buy opportunities, but we're in a sell zone, in a buy. I'm going to be looking for buying opportunities, opportunity to place a buy trade where the flow is backing that trade. But however, I know it's a correctional movement. When the market comes over here, I need to start looking for sell opportunities. I need to sell for 2 hours. Again, this is a real-time asset. So I'm going to go to the 4-hour time frame to just mark out. You could see how that the market came to this high, and obviously around this block here, that's where we saw this rejection. But then the market still has potential to do this. This was the last bearish move, and the market broke it without respecting it. That's why the market retraced to it. So if an institutional trader will be trading, will be looking at this level to sell, to buy from this level. Okay, so I'm going to be looking at that too, looking at opportunities to buy. Okay, just mark out zones. That's what I'm going to be doing, just marking out zones. Are you with me? So I'm going to duplicate that because I'm going to need it. Okay, so this is the first zone. The market has liquidated that. Now this is the more recent zone. The market is yet to completely do what it has to do there, meaning that there are opportunity for this market to sell into this level. Okay, so this is going to be my most preferred level to buy from. Okay, to place a buy trade. This is an option trade, so I need to have my confidence in place. I don't want the trend. Remember, I'm not trading in 1 minute, and I'm always trading a 2 hour. So I want my confidence to be in place. Okay, so this was pretty the zone. We saw this rejection of this level. We saw this massive rejection, this expanded move. Okay, and it expanded from here. So I'm gonna adjust this structure. Okay, I'm gonna adjust that structure. Okay, to here. Now this is my most predominant structure where the flow started from. 50% of it was a structure that was not respected. This structure was not respected. Okay, market flipped it, the market retraced into it. Now what would the market do? The market can sell off to this point, can buy off to this point. Okay, I need to use the 15 minutes to further understand that it can do that. Let me see if I can find a magnet from off that level, albeit this is a major zone. Okay, so I'm going to use this 15 minutes to mark out a major zone. Okay, I'm going to show you what I'm seeing. Okay, what I'm seeing that is sponsoring this move and why I'm going to place my trade immediately. So I'm placing a buy there for 2 hours already. It's going to do that, but I'm going to show you why I'm placing that. Okay, now notice that when the market came out of this structure, it retraced to this level and tapped into this, but then it liquidated that structure. No, this structure has been liquidated. See, that trade is a losing trade for me though. I didn't notice this. I didn't notice this rejection. Liquidated this. It doesn't hold more strength. So obviously the market is going to sell into this structure. Okay. The market is going to close somewhere around here. Okay, let me mark out a zone where I see that the market is going to close. And that's where I'm going to place a sell from off that level. I didn't see that coming. Okay. So the market is going to buy so much into this level. That's where the next market leg is. That's where the supply, the flow of order is stacked up. There's liquidity stacked up here. So the market needs to go to where that liquidity is and grab that. So let's see if 2 hours will allow the market to go into this level before tapping down here. So I want to see the market move to this level, then tap down to meet me where I want it to meet me. Okay, guys, already I've placed a trade there, a buy trade, and the market is going to go up into this level. This is where the market is heading to. So that being said, let's watch out. But then we understand that though we saw the market liquidate this, market retrace this, so we want to see if the market will liquidate this high. It's been a rejection. The market needs to come for this high, rally down. There's volatility in the market. There's movement, momentum. So it's a decision level for the market. So the new candle, I need just a little rejection and then pump into this. So let's see the next 2 hours. If it doesn't do a massive drop, but then this is the level I want to see the market come into. I don't want it to take out this high. Okay, if we take out this high, but then the market needs to drop down, pick up liquidity. There's something stacked up here. You need to come tap into it and rally up. But either way, we're midway into the trade. From year to year, if you're using your Fibonacci, I don't intend to make this too long, but then let me get to bring a balance, because I love bringing balance to what we're doing. Okay, so from there to here, now whatever level you measure your Fib from is just understanding the difference why you're using 50%. Okay, so this is 50%. This is my optimal trade entry. Like I said, this is a structure here below here. This is 50% of the move. The market has come to 50% of the move, meaning that the next move is not going to be a stronger move. Okay, if it came to 60% and move back, then the move was going to be a stronger move. But this one is not a stronger move. It did 50%, so it's not a stronger move. It needs to come down to 20%. This 23 optimal entry, then it does that. If it came to here, that's retraced down to this level alone and did not break past this level, I would have trusted that the market would continue to do more highs. Okay, but it has done 50% of the expanded move, the move it did. 50% of that flow has been liquidated. So what is coming here is just a little flow. You can see it's a rejection. That's what I wanted. Just a pin bar. What I wanted was this rejection. Okay, I want you to see what I mean. Let me zoom in. So you could see that, and that's that. So cheers, guys. Cheers, guys.